Welcome back. You're watching Buy Now, Sell Now on ET Now, and time for our query segment. We have our experts today, Kunal Bothra as well as Ashish Maheshwari joining us. So let's get on board our first query. And this one is from Ujjwal Kumar, and he wants a technical view on welspun Corp. He's holding some shares at about 148 rupees per share. So he wants to know, should he average book losses or continue to hold? Kunal, what's your take on welspun Corp? 148 is the buy price for Ujjwal.
I don't sense that there should be any panic, for the stock because the charts are relatively stable. It's already gone through a correction. I think 2 3 months back from 160 to almost 110, and then going through a recovery mode. So I would sense that you should probably be a bit more patient over here. If you're looking for a trading stop loss as such, then I would suggest that keep a stop loss of 123 on Welspun Corp, and I think if the recovery stands stable for the stock, then you can look at the stock coming back towards at least a 150 160 zone over the next 2 to 3 weeks. So I would suggest a hold on Welspun Corp.
Kunal, coming back to you on a short-term query on IDFC First Bank, bought by Rajeshwari about a couple of months back at levels of 50.1. She's asking if she should hold on or should she exit at this juncture.
I think you should definitely hold on to the stock. Don't look at this as just a short-term stock. You've bought the stock at the lower end of the price trend. It's not that the stock, your buy price is not in the 65s and 70s where the stock had hit, start of 2021. I would suggest that if possible, look to average the stock further. If it comes closer to this 40-45, support territory. This is a very important support zone for IDFC First Bank. We've seen multiple bounces happening for the stock at this kind of a territory, and I would suggest that if you can probably average it out further and hold on for the next 3 to 6 months, you can get a good exit price for IDFC First Bank.
Okay, this one is from Kaustubh, and he wants a suggestion of about 2 to 3 stocks that you can actually buy in this dip for the longer term. Ashish, if not 2 to 3, at least one stock if you can give Kaustubh, which he can actually look to buy in this dip for the longer term.
In fact, one large cap and one mid cap idea I can share, which investor can buy. My large cap idea is Vedanta Resources. My view is that the prices of copper, aluminum, and zinc, which we have seen, they are almost at 52-week high in this year, and they are up almost by 50 to 75% year over year. So the kind of free cash that Vedanta is going to generate in this year is going to be huge. So you may expect even a liberal dividend. At the same time, further growth is in the stock price is also expected. So my target for Vedanta in 1 year is 500 rupees. Another idea which I like is a mid-cap stock. It's called Ward Wizard Innovation and Mobility. This is a BSE listed company, but the USP is they are into e-bikes. This is a dedicated company which makes around 2,500 e-bikes at present, and they are the ones who are having 9 models of high-speed e-bikes. Now they are also expanding their capacity by infusing another 150 crore rupees in the company and set up new facilities. So this is a stock which is at 75 rupees, and I'm expecting in 1 year time frame, because the kind of craze is there for e-bike, it has a potential to give at least 50 to 60% kind of appreciation. So Ward Wizard Innovation and Mobility is my pick number 2 in mid cap.
Okay, Ashish, I'm coming back to you on this one. This is a fundamental query on SRF. And we've got a question. This one is coming in from Lakshman, who is an old-time viewer of ET Now from Denmark. He's holding on to 70 shares of SRF at 2400 levels, which is post-split, and he's wishing to hold on for the next 10 years. He's asking whether he should approach a buy on dip strategy and whether this time frame is something that he should consider.
Yes, I think for 10-year time frame, if investor is having, certainly SRF can be a good multi-bagger bet. And it has handsomely rewarded investor in this year also, because the kind of product portfolio they are having, they are the market leaders everywhere. And nowadays, like if you see the buying trend of institutional investors, they generally try to remain with the market leaders or people like who are having monopoly, kind of situation. So SRF is a company which is doing very good in nylon tire cord as well as refrigerant and specialty chemical. So this is a no-brainer now. After this correction, gradually you can do SIP and keep on adding SRF in all fall. In my view, post their expansion and the kind of cash companies generating, this is going to be again a blue chip stock in next 2 to 3 years from here. So 10 years is a good time frame to remain invested in SR.
All right, so that is on SRF. Rajat, I hope that that also would be able to address your query on SRF as well. This one is coming from Parikshit. He wants a technical view on Mahindra Mahindra and Warike Sugar. We'll take Mahindra Mahindra. He's bought about 1,000 shares at 830 rupees per share. So he wants to know whether he should continue to hold, sell or accumulate. What's your take on this one, Kunal? Is Mahindra Mahindra 1,000 shares at 830 rupees per share?
Well, I think it's a very good acquisition price for Mahindra and Mahindra and for the viewer. I think you've bought into a top quality auto stock, and I think the fact that the stock has also gone through a very strong recovery compared to many of the auto peers in the last, I think, 14-15 months of the market recovery. I think it's just exceptional to see the stock going through, a phase where from 300 or sub 300 levels, it's recovered to 900 odd levels where it's currently trading right now. I strongly believe that M&M is should be poised for at least a 4-digit breakout over the next 3 to 6 months. The charts are very strong enough. We've seen very stellar recovery. I would also suggest that if you can probably hold on to it further than that as well, say maybe for the next 1 to 2 years, I believe there should be much higher rewards, which could be in line for M&M. So near-term targets, you can keep it closer to 1,000 levels, but I believe if you can hold on to it for another couple of years, I believe that the stock can achieve much more levels, beyond the 1,000 mark as well.
Okay, I'm coming back to you, Kunal, on a question coming in from Prashant, and he's holding on to Honeywell Automation. And he says that he's got a mid to short term time horizon. He's bought at levels of 44,500. And since that level, obviously, the stock has given up some of those levels. In fact, it's down about 1.2% in trade today as well, trading below 42,500. Should he hold on to this or should he sell and book a loss?
I think stocks like Honeywell Automation are not, specifically, advised for short-term trading. Now, for these kind of stocks, you have to have a longer-term time frame, and you have to be patient enough because these stocks they can move devoid of market conditions. So if markets are volatile, it's possible that these stocks they can go into an uptrend, and it's also possible that when markets are into full song, these stocks can go into their own time-wise corrections. So specifically for Honeywell Automation, I believe that you should have a longer term time frame, and if you're okay with that, then I believe that it makes sense to hold on to the stock. It's going into its own patch of consolidation. Once it gets over, I believe that a stronger and a fiercer uptrend could begin for the stock, and even a break past about the 50,000, 52,000 mark, which was the previous swing high for the stock 6-7 months back. I think that should also be taken out. So I would suggest a hold even at current levels.
Okay, this one is from Dilip Mane, and he's saying he's bought Godrej Infrastructure 10 shares at 2,499 rupees per share. I believe he means Godrej Properties. He wants to know whether it's worth to stay invested in Godrej Properties for the next 2 years. What's your take, Ashish? Godrej Properties, 10 shares is what Dilip holds at 2,499 rupees per share. Worth staying with this particular counter for the next 2 years, given what we've seen with the realty counters?
Yes, I'll advise investor to remain invested in Godrej Property, and even any fall in current from current prices. So if you get even at 250 or 2,200, add on this particular stock, because one advantage with Godrej is there's not a one pocket company. So where they are just not just operating in Mumbai, but they are operating on pan India basis on all major metros, and they have very attractive price range which attract a lot of middle class home buyers, and this is the time where a lot of such buying is happening. And we have seen one of their projects which they launched in North India, the kind of huge bookings they got on day one. So Godrej Properties is going to come out even with very good set of numbers for this quarter. And I'm quite upbeat on Godrej Properties, Oberoi Realities, and Macrotech Developers. In my view, they are going to outperform whatever the expectations are there in this particular quarter. So at least buy Godrej Properties, and decline is going to be a strategy.
All right. Kunal, coming to you for the next question. This one's coming from Shekhar Kadam, and he's got Aegis Logistics, quantity of 70 shares of Aegis Logistics, bought at levels of 245. He's wondering whether to keep this and to hold on to it for the long term. He's not specified what his time horizon is, but I'm guessing long term is more than a year. What should he do?
See, I think there are some renewed concerns emerging out for Aegis Logistics. I think from 375, 380, just about 4-5 months back, the stock is now almost on the verge of breaking that 200 mark on the downside. So it's been a very sharp correction for Aegis Logistics. I would sense that this is more of a short-term pain which is getting built into the stock price. Maybe the stock can get into a further correction mode for another 10%, say over the next 1 to 2 months. But if you can try and endure that, I believe that with a time frame of 6 months plus, there should be a stronger recovery for Aegis Logistics. So the long-term charts are attractive, but near-term charts indicates that some bit of volatility and some bit of pain could still be left into the stock price. I would suggest a hold if you have a time frame of 6 months plus.
All right, Kunal, this one also is from you, and this one is from Sagar. He wants a technical view on Nifty Bank. He's holding 40,000 call monthly option, and he's thinking whether to book profits or hold it for another day. What's your take on this one? It's Nifty Bank for 40,000 call monthly option is what Sagar is holding currently.
See, I'm not sure what the exact price would be at the current market price for the 40,000 call for the Bank Nifty. But I believe that with the breakout which you've seen for many of the private sector banks, specifically, ICICI Bank, Axis Bank today also leading, towards a strong breakout. I would sense that this could be a strong trending move. Now, ideally, when you are buying call options and if you're in the money, the best way to try and do is that you have a partial profit booking at every new high the banking index makes or every new high a banking stock makes, or else you can trail your stop losses to maybe today's today's low or intraday low for the banking index and keep on trailing the stop losses higher as now the banking index moves along. So I would suggest that you can hold on to your options over here, but have a trailing stop loss mechanism or at least a partial profit booking mechanism for the options.
Okay, Ashish, I'm coming to you on this next question. This one's from Rita, and out of the 3 stocks that she's selected, I will ask you about Havells since it's been in focus recently. Would you suggest that she can get into it for the long term?
Yes, she can get into this stock for long-term perspective, though this quarterly numbers were below expectation because whatever their raw material prices were there, like copper, aluminium, plastic, paper, everything has really shot up. So as they cannot pass everything to ultimate consumers, so there's some pressure. But I think gradually things are going to stabilize and they will be able to pass on raw material price hike to end consumers because the kind of sales figures have come from maybe Polycab or Havells. There's no shortage of demand. So demand is coming up, but margins, some pressure is there. Second, as Havells and these Polycabs, etc., they have moved quite a bit in last 3-4 months. So some cooling off is taking place. But fundamentally, if you ask me, on declines, Havells can be made part of the portfolio and can give you very good returns if you can remain invested, at least with 1 year perspective.
I know we've taken SRF, the fundamental view, but a lot of questions are coming in for a technical view on SRF. One is from Syed. He's saying he's holding SRF shares from 2,300 levels. What is the upper target that one can look at for SRF? And also for this one's from Rajat. He also wants a technical view on SRF, looking to enter for more than 6 months. What sort of a target can I expect and what could be a good entry point? Kunal, could you help both Rajat as well as Saeed on SRF? Both of them want to know a target, especially Rajat wants to know what could be a good entry point for SRF as well.
Ashish, on SRF as well, that you mentioned that this could be a multi-bagger over the next 10 years plus. I think it's already been a multi-bagger as such, and of course looks very strong in terms of potential from long-term view. Now, what has happened for the charts for SRF on the monthly time frame is that the RSIs, that's the relative strength index, has gotten to the levels of 90-95 for SRF. Now, frankly, these are not comfortable territories to initiate fresh longs for a stock, because these are very highly overbought territories. Now, there are two things which can happen for SRF technically. One is that the price can go into a consolidation for the next 3 to 6 months. It's possible that maybe 2000, 2200 could actually be a pivot range for SRF on the downside, and the stock can remain into this range, be a bit more whipsawed, be a bit more volatile than what it has been historically. And the other way to look at it is that if the RSIs are at an overbought territories, then you typically expect the stock getting into a correction mode. So I think whichever way happens, whether the stock gets into a time correction or into a price correction as well, you could probably get the stock at slightly cheaper levels over the near term. So I would suggest that if you're looking at it from a longer term view, look to buy the stock. I think there should be a phase where you might see the stock getting into a correction further, maybe try and coming back towards the 2000 levels as well. So if you're ready for that near term correction and holding on to it from a long term view, I would suggest the buy on dip approach for SRF closer to that 2000 mark is where you should look to average it out further.
I'm coming to you, Ashish, on Entertainment Network. It's a micro cap. We've got Ramesh from New Delhi who's bought at levels of 193, and he's looking to hold for the next at least 1 to 2 years. The stock is not too far away from his buy price at 182, but the volumes are quite low, and it is, like I mentioned, a micro cap. Should he hold on?
See, my suggestion will be to exit from this stock and switch to Network 18. If you see numbers of ENIL, last 2 quarters also they reported good amount of losses. Besides, if you see Network 18, which is available at 77, 78 rupees, their last quarter profit was around 200 crores, and I'm expecting this year they will do at least 750 to 800 crores kind of profitability, because the kind of growth is there in TV advertising is huge. So my suggestion will be to exit from ENIL and shift to Network 8. Will be better set.
All right, and with that, let's kickstart the rapid fire segment, a part of the query segment. And this one, first one is for you, Kunal. This one is from Mr. Balan. He's saying that he has exposure to metal counters like NMDC as well as Tata BSL. He wants to know whether he should hold, sell or switch these counters. NMDC holding price is 150 rupees per share. What should he do?
I think we should look to hold both of them. Strongly believe metal stocks are going through a short-term correction, but they would make a very strong comeback. I would suggest to hold on both of them.
Okay, the next one is from Ramana, and she's asking about Datamatics Global Services. She's wondering whether to hold on. I'll come to you, Ashish, on this one. Should she hold on?
Only thing is what price investors bought if they have made sense.
Close to 500. No, 50. Oh. Sorry, cost price is 50. Apologies.
Okay. So they're making tons of money. If you see from 50 rupees now, stock is at 310. So my suggestion will be to book gains, because I am expecting some correction is coming in IT pack. So better to exit at this price.
Okay, this one is from Zafar. He wants to know whether he should buy Nalco at current market price. What's your take, Kunal? What should he do?
Bullish on the stock. I think current level should be good level where you can look to chip in. Targets from a near term could be kept at 120 plus for now.
Okay, I believe this next question is on, okay, it becomes really hard when you spam like this, guys. I believe it is on Federal Bank, and the question is whether to buy at this juncture. This question is from Puneet. I'll come to you, Kunal, on the charts.
So I think it looks attractive. The last week breakout for Federal Bank was very, very strong. And the fact that the stock has seen a follow through as well indicates that this is a very strong trend in the making. So would suggest a buy on Federal Bank.
Okay, this one is from G. Kumar. He has IOL Chemicals, which he's bought at 650 rupees per share, 50 shares of that. He wants to know for the next 1 to 2 years, what should he do? What's your take? Ashish, what should he do with IOL Chemicals? Makes sense to stay put with this holding?
No, I suggest to exit from this stock. The stock has corrected quite a bit from 800 rupees to 553. And my sense is as there's some cool off in chemical prices, so traders will rush to liquidate their position in chemicals. So you are witnessing sale off in chemical stock across the board. So instead of this, I'll advise to again venture into ICICI Bank or Axis Bank, where at least I see 20% kind of upside is there in next 3 months.
Alright, so that's the view coming in on IOL Chemicals and what should he do. And with that, we come to an end with this rapid fire segment as well as with the queries as well. Thank you, Kunal and Ashish, as always, for joining us on the show, helping resolve viewer queries as well as giving us a view on ICICI Bank as well as Reliance Industries. And on that note, we'll slip into a break in this edition of Buy Now Sell Now with lots lined up for you on the other side, so don't go anywhere.